let's go ahead and get started. Thank you everyone for joining us in today. We really appreciate it. Today's class is a 1-hour live stream. Rev up your listings in reverse. It's going to be all about how a realtor can help older homeowners list and rebuy a better home using the reverse mortgage for purchase. What is that? Well, our instructor today, Robert Ross, will be telling you all about that. Just a couple of housekeeping items before we begin. So we will take questions at 11:30 and at the end of the class at 12. You can drop your question in the chat or the Q&A at any time. Both buttons are on the bottom of your screen. So if you have any questions at any moment, just go ahead and type in the chat or in the Q&A. We'll answer them at 11:30 a.m. and at 12 a.m. Next is that the PowerPoint that you see here is our class presentation. If you would like a copy of this class presentation, please feel free to chat in to the panelists, which is just me and Rob. Your email, we will be the only ones that see it, and we'll send you that PowerPoint right here at class, so then you can use it to follow along. You can download it, print it out, whatever you need to do. We are also recording this live stream as well, and a recording will be sent to you from OCR. So please, if you don't receive it afterwards, you feel free to get in contact with them, and they will get you this recording as well. But of course, if you can stay till the very end, please do so, because we do talk about how you can take advantage of a few different marketing materials, complimentary, of course, different strategies, and even take advantage of some complimentary software to really reel in the next listing. So without further ado, Rob, please feel free to go ahead and take over.
Thank you, Crystal. Thank you, OC Realtors. Thank you, Cassie. Robert Ross here, Reverse Mortgage Educators. So outside of education, I still provide these loans. I still originate them every day. I work with realtors and their prospective clients with helping them use the reverse mortgage for purchase to buy their next home, which we're going to talk about, of course. I've been in the business for probably about 17 years now, so I really have seen it all and been through a lot of scenarios and purchase scenarios and all kinds of stuff. And over the last probably, I would say maybe 10 years or so, I've really have worked with the real estate community. And really over the last 10 years, I've gotten the same type of questions in regards to reverse mortgages, reverse mortgage borrowers, folks that already have them. And I've really have boiled it down to 3 areas how I believe a reverse mortgage could help a realtor's business. And that's kind of what we want to talk about today. I mean, of course, we're going to talk about the product and some details about it, but more importantly, I want to show you a way to use this product to, generate some extra activity in your book of business. So without further ado, let's jump onto our first slide here, which is what a realtor should know about reverse mortgages, right? Well, like I said, I really have boiled it down to 3 ways that I think this product could help your book of business or help you generate more activity. Well, one, there's a lot of confusion out there about the product. There's a lot of advertising about the product. There's commercials on TV, there's mailers, phone campaigns, you name it. The older demographic, especially the boomers, are getting a lot of information about this product, and they still don't really understand how the product works for the most part. And so just by the sheer numbers of it, you being a realtor, you're going to get asked those questions from time to time when you come across an older homeowner. They're going to ask you, what is a reverse mortgage? So obviously, it's a great idea to have some sort of understanding or at least an educated response to that. So that way, it'll put you above and beyond your competitor, and it'll help you deliver information to an older homeowner that they may not know. And that's a good thing for you to provide that service, of course. But one thing I want to point out is that for the folks that do inquiry about a reverse mortgage, only about 50% of them actually end up getting one. And that's for a lot of reasons. Maybe one, the reverse didn't provide enough benefit in the house they're currently living in. Maybe they were short to close. Maybe their mortgage amount was too high to pay off. All kinds of reasons. Maybe the house they're trying to do the reverse mortgage on is not the right house for them anymore, and they should consider moving to a different property to either downsize or right size, as we put it, and get to that better home rather than stay in the one they've been in for the last 30, 40 years. So if 50% of the people are not getting a reverse mortgage, what are they doing in lieu of that? Well, I'll tell you, they're listing their homes with you, the realtors out there, and they're selling them and moving on to a different property. So really what I want you to understand is this: when you come across an older homeowner in your book of business or in your sphere or however you generate your activity, and they ask you, what is a reverse mortgage? What I really want you to do is I want your ears to perk up, and I want you to think about that question and what it really means. Because what it means is this: typically they're having some sort of financial issue, and they have a house, obviously, they have equity, and they're older. And they're trying to figure that problem out. And what I've realized more times than not is that selling that house they've been in for a long time and moving to something better, or right size, as I put it, is really the key to keep them in a good financial position in their retirement years. And what I mean is this: they sell their home, they extract all the equity out of the house when they sell it, right? They have net proceeds after paying off their mortgage. They use either all or some of those net proceeds to buy the replacement home. And in some cases, to find the correct replacement home, they might need a mortgage, and qualifying for a mortgage is difficult. And so the reverse purchase can help with that. So when someone asks about a reverse mortgage, just know that, hey, there's probably a good chance they're going to list their home in the near future, because only 50% of the people that inquire about this product actually end up getting one. Now, number two, for the clients that have already made that fundamental decision, I need to do something different in retirement. I need to get some of this equity out of my house. I want to sell. I want to get to a downsized property because the neighborhood changed, because my house is two-story, because I have a pool, because it's too big to maintain or clean or do all these things, right? And so getting to a better, more manageable home in retirement is really the key option here. And a lot of times when they sell their home, they're trying to accomplish a few different things. They want to put a roof over the head for the rest of their life. Obviously, they're in retirement, right? A lot of times they don't want a monthly mortgage payment when they get to that new replacement home. And a lot of times they want to retain some of that cash from the home they just sold as net proceeds in the bank, right? And so these are hard things to accomplish, and that's where the reverse mortgage for purchase could help out. You'll see in my first example how that plays out. So for the folks that have decided, hey, I want to sell my home and get to something different in retirement, the reverse mortgage for purchase could make that, or help that transaction happen a lot smoother and have a more positive result. Okay, and best of all, obviously, a realtor is going to get a listing and a buying opportunity with that same client. So that's exciting as well. Now, number three, for the folks that already have reverse mortgages, I get this question all the time. I get a call from a realtor probably at least once or twice a week that has taken my class or has networked with me or been in communications with me. And they ask me, hey, I just came across a client that's got a reverse mortgage, and either A, they passed away and the kids are trying to figure out their options, or B, the homeowner's still living and they really don't understand the mortgage statement or what happens in the end with the reverse mortgage, and they're trying to understand or familiarize themselves with that. And so understanding the reverse mortgage when you come across somebody who already has one, again, will put you in a different light than a competitor of yours who's just talking about listing and selling their home. So here's what happens. A lot of times when these loans are done and the borrowers pass away, these homes are sold by the next of kin, the heirs usually. So when you come across somebody with a reverse mortgage, become their buddy, help them understand the loan, let them know what happens at the end with the reverse mortgage, educate the family about it as well. Because, like, again, I would say 9 times out of 10, when a house has a reverse mortgage on it and all the borrowers have passed away, the house is listed with a realtor and sold. So what you're really doing is creating a future listing for yourself. So again, when you come across someone with a reverse mortgage, don't just pass by it. Sit in the moment, get to know them, help them understand the product. If they're not familiar with the product anymore, help them understand the end processes, which we'll talk about today. So that's very important. So again, just to recap, number one here, understanding what a reverse mortgage is certainly beneficial when someone asks you, but remember, 50% of people only get one, and the 50% that don't get a reverse mortgage actually end up listing and selling their property. Now, for clients that want to buy a house, that are trying to find a way to make all these 3 things happen, like I talked about, cash in the bank, no mortgage payments, replacement home for the rest of their life, reverse mortgage for purchase can help with that. And then finally, number 3, for those folks that have reverse mortgages, a lot of times those houses are sold when all the borrowers on the loan have passed away. And so you're creating a future book of business or a future listing for yourself. So those are the 3 things that I've seen time and time again on how this product has helped realtors, especially you out there. So let's dive into what is a reverse mortgage, really outlining that number 1 bullet that we just talked about. So sometimes it's easy to explain a reverse mortgage to an older homeowner by comparing it to a regular mortgage that they're more familiar with, right? Like a regular 30-year fixed mortgage. So here's what I would say typically. Okay, you know that 30-year fixed mortgage that you have now, every single month, you get a monthly mortgage statement. And on that mortgage statement, it shows you the payment that you have to make. And a portion of that payment obviously is interest, and a portion of that is principal typically, right? That's your typical mortgage, very simple. Well, with a reverse mortgage, it's the same thing. You get a monthly mortgage statement every single month. And on that monthly mortgage statement, it's going to show you the interest that's due on the money that you've borrowed thus far. What happens is, if you do not do anything and let it be a reverse mortgage and simply take that mortgage statement and file it away, the interest costs for that particular month will simply add to the balance, and the next month's statement will have a higher mortgage balance. So what you're really doing is you're simply just deferring the interest to the balance every single month. Now, one thing I want to make you aware of is this. Not all clients let the reverse mortgage reverse. What they do sometimes is they may say, hey, the interest costs for this month are $1,500. I have an extra $1,500 this month. I'm going to go ahead and send it into the servicer. What's going to happen, basically? Well, they've paid the interest for the month. That means their mortgage balance will remain exactly the same next month. And so what they've done is they basically have created themselves an interest-only loan, for an example, right? So they control when they want a payment, when they don't want a payment. And that's what really gives the loan what we call an optional monthly mortgage payment. Or if maybe they wanted to pay more than $1,500, maybe they wanted to pay $2,000, well, they could do that as well. Pay $2,000, $1,500 goes toward the interest, the $500 will start to bring the balance down. Or maybe they only want to pay half of $1,500. They send a check in for $750, and guess what? The other $750 they didn't pay simply adds to the balance. So what you ultimately have is a mortgage with optional monthly mortgage payments. And why would somebody want to contribute to a reverse mortgage on and off monthly? Well, sometimes they're just trying to make sure there's a certain amount of equity in the home, maybe for the kids, maybe for themselves to have more options in the future. But the rule is you don't have to ever make a monthly mortgage payment. And the reason why you can is because on reverse mortgages, there's no prepayment penalties. You're free to refinance out of it. You're free to pay it off whenever you want. You can even refinance a reverse mortgage to a new one if it makes sense. These are just mortgages like any other loan out there, nothing to be afraid of. Now, if a client never makes a payment on a reverse mortgage, is that okay? Of course it is. That's how these loans were designed. They're designed for the older homeowner to access equity or buy a home in this case and not make a monthly mortgage payment the rest of their life. They simply just add the mortgage interest to the balance every month, and their balance will be higher in the future than when they started. Very simple, right? Will you have a different outcome if somebody paid on and off throughout their life versus somebody who didn't? Of course you would. One's going to have a more extreme higher balance than the other, right? But the rule is you never have to make a monthly mortgage payment for as long as you live. And that helps out a lot of folks that are living on Social Security alone. Now, the reverse mortgage has only been available in a refinance product for its entire life for the most part. In 2009 is when Congress, FHA, and HUD rolled out the reverse mortgage for purchase. So up until that point, since the late 80s all the way to 2009, a homeowner could only use a reverse mortgage to stay in the home they're in and access equity. Well, that didn't do very well for the real estate community, right? Because you guys all want to sell properties and help older homeowners buy a home, right? Well, the product became a purchase product in 2009. And that's when I really started working closely with the realtor community and helping their older homeowners buy that next home using a reverse mortgage. So not to be confused with the refinance. They are the same product. They work the same way. But what we're doing is we're putting a loan on the house they're buying that just happens to be a reverse mortgage. And when they close escrow, there's no monthly mortgage payments, or they're optional, as I put it. So that was a great time in my career to start working with realtors and their prospective older homeowners. Now, one of the things that gives this loan its legs is the fact that people can still qualifying at living on a small fixed income or having a little less than perfect credit. You don't have to have a ton of income to qualify for these. And that's what really gives the loan its legs. As long as you have enough income coming in to handle property taxes, homeowners insurance on the property, an average cost per square foot for utilities, a residual amount left over for groceries and medical expenses and gasoline, and then whatever's also on your credit report. And usually $1,500 to $1,800 a month in Social Security will handle the job for that, right? So people can still get this loan living on a lower fixed income, which helps out a lot of people. You'll see in a couple more slides what the average Social Security payment is nationwide. And it's quite low, and it would be hard to get a regular mortgage with that type of income. So despite not qualifying for any other loans out there, they can still qualify for a reverse mortgage. And if they want to make payments, it's clearly or completely up to them if they wanted to do that. Now, one of the things that I've noticed or witnessed and been involved in with realtors and their prospective clients who are trying to figure out their next move, if they want to stay in the home they're in, if they want to sell it, if they want to buy a replacement home, they're trying to figure out this fundamental decision about their finances and retirement. A lot of times when I go on these appointments with real estate agents, I'm met with the intentions of not wanting to sell their home. They're trying to stay there, but we're all trying to help them understand what the options are, right? And sometimes, like I said, I'm met with the fact that they want to stay in a house. They really don't want to sell. They've been there forever. I get it. I've been in my house for 17 or 18 years now. I don't want to leave it, right? It's emotional. It's everything. So I totally get that. And unfortunately, sometimes we have to look beyond those things and figure out the core issues and help them make that decision. And one of the things that I've done that's been successful, and you should all try this at one point in time, is you sit down with the older homeowner there. And if I'm there with you, great, I'll do it as well. With the family there, whoever's all in the room, and run a budget. Very simple. Get their income, put it on top of a piece of paper, and go down their budget, start subtracting numbers. And more times than not, that ends up being a negative number. And that's where the problem lies. And a lot of times, the home is the culprit. And so getting to that replacement home that's either downsized or a right-sized property is what's going to save the situation and help them get to a better retirement. And that's where the reverse purchase can also help in, of course, as well. So again, many meetings I've been on with real estate agents and their prospective clients had no intentions of wanting to sell, but after going through the exercise of running a budget and talking it out, they then see the light and understand that, hey, this is a good option for me to do this. It's going to make my life in retirement a lot easier. What am I fighting for anymore, right? So again, going down that budget and understanding the options out there is what helps them make that decision. Now let's talk about a refinance reverse mortgage really briefly, because again, you're going to get questions about this throughout your career from older homeowners. So it's a good idea to understand how these things work, right? And I'll give you just a basic example of how a refinance would work. Typically, when someone calls into my office and they want to do a reverse mortgage, they're telling me, hey, Rob, I am 70 years old or 65 years old or whatever age that is. Age is a very important number for us to know because we base our loan to values on the youngest borrower involved in the transaction. So we have to know age. If they're married, if they're not married, we have to know all the ages of participants in the mortgage, right? To understand what the loan amount's going to be. So in a refinance, let's say someone calls in and says, Rob, I'm 7 years old. I'm having problems in retirement. I have a mortgage payment now, and I'm tired of making it. I want to free up my Social Security income so I can do other things in life. Okay. How much do you owe? I owe $200,000 on my mortgage. Okay. What's your house worth? It's worth $800,000. Okay. Mr. or Mrs., you qualify for 50% loan to value based on your age. Okay. So obviously with the $800,000 value, they qualify for $400,000, but they owe $200,000 on a mortgage. First thing we have to do is we have to pay off that loan. So we pay off their $200,000, and now their mortgage payment, their monthly mortgage payment is now eliminated. So now that frees up their Social Security income. They don't have to make a mortgage payment anymore. Now they have a $200,000 balance, right? They also have an additional $200,000 that they qualified for above and beyond their payoff. They qualified for $400,000, right? So that's the money that they can use for their retirement needs. They can either get a lump sum distribution of some of those proceeds up front when we close the loan. They could take monthly installments every single month out of that proceeds sent to their bank account to help offset expenditures. Or better yet, they can take all that $200,000 and leave it in the form of a line of credit. Now, the line of credit is probably the most interesting feature of the loan for many reasons. For one, if you haven't borrowed the money yet, it's sitting in the line of credit. That means it's not a part of your balance and you're not being charged interest for not using it. That's great, right? If you haven't used the money, they can't charge you interest on it. That's a good thing. So you're saving on interest. Number two, the money in the line of credit, despite any kind of real estate or interest rate environment that we're in, we could be in a complete recession and values are plummeting It doesn't matter. And interest rates are skyrocketing. Guess what? The line of credit is always guaranteed to be available. It's guaranteed for life. Unlike a traditional home equity line of credit that you get as a second mortgage on your property, those lines of credit can be frozen at any given time, given the investor's need to do that. They can do it in any market, any interest rate market, any real estate market. It's all in the notes section of those loans. With the reverse mortgage and interest, the line of credit cannot be frozen. So that's a great thing. And then lastly, the money that's inside the line of credit, whatever is left in there that's not being utilized, gets a growth rate. In other words, they will increase the line of credit every month, more money for you to borrow against as you need to. Okay, and that happens despite the appreciation of the home. The house, again, could be going down in value. They're still going to grow that line of credit for you, let you have more equity out of that property as the years go by. So that's a very cool part about the loan, is the line of credit. So that's your typical refinance scenario that I see day in and day out. Now, one of the biggest things about this loan is that this can only be utilized on an owner-occupied property. You can't have a reverse mortgage on an investment property or even a second home or a rental. It's got to be your primary residence where you spend the majority of your time. And you're probably wondering, how do they know if you're living there? Well, every single year, they send you an annual occupancy cert, and sometimes twice a year, and you have to attest to the fact that you're living in that home as your primary residence and send it back into the servicer, and that usually does the job to let them know that you're occupying. Are there other ways they know if you're occupying or not? Of course there are. And are there people out there breaking the rule? There might be, but they're in jeopardy of going into foreclosure. So just know that when you got a reverse mortgage, it's got to be on the house that you're living as your primary residence. Can we do a reverse mortgage on an SFR? Of course we can. Can we do it on a condo? Well, if we're working with the FHA product, the condominium complex should be FHA approved. And if it's not, that doesn't mean we can't get it approved. We just have to add another 3 to 6 months typically onto the file to get it FHA approved, a full approval in the community. If the community does not want to get approved on a full aspect, then we can do what's called a single unit approval and work that way as well. But it does add duration of time to the file to get it closed. So ideally in a purchase scenario, if someone's going to buy a condo with a reverse mortgage, an FHA reverse mortgage, then they should target those communities that are already FHA approved. And you can find those properties on FHA's website or HUD's website. Now, 1 to 4 units. Can we do a reverse mortgage on a 1 to 4 unit? Absolutely. Can you live in one of the units and rent out the others and collect rental income? Absolutely. Do you have to make a monthly mortgage payment while you're doing that? No. In fact, I'm starting to see more trends of people buy a 1 to 4 unit, live in one of the units, therefore fulfilling their obligation of owner occupancy, and then renting out other units, collecting income, all the while not making a monthly mortgage payment. That's a great retirement strategy for a lot of older homeowners. Okay, so that's basically the idea of what a reverse mortgage is. Now let's dive a little deeper into the reverse purchase. Okay, so my first example here on a reverse mortgage for purchase. Now this is the loan that's being placed on the house that they're buying, not the house they have already. It's being placed on the house they're buying as purchase money. Okay, we're going to base this example on a 73-year-old borrower. We just pulled that age right out of the sky. Again, remember, every age is a different loan to value. The entry-level age to get a reverse mortgage, an FHA reverse mortgage, is 62. And every age from 62, 63, all the way up to 95 is a different loan to value. And the older you are, the bigger the loan amount, the less down payment you put, because that's less time for deferred interest if you don't make a payment over your life expectancy. So it makes sense. The younger you are, the bigger the down payment, the lower the loan amount. The older you are, the bigger the loan amount, the littler the down payment, okay? So 73-year-old borrower, here we go. Let's say you found an older homeowner who's 73 and they're telling you, I'm tired of making my mortgage payment, I'm struggling in retirement, I'm living on Social Security, I need to sell this home and get to something different. And you go ahead and list their home for $850,000, okay? Now, after the close of escrow, after paying off their mortgage, after paying all the real estate costs for selling that piece of real estate, the customer nets $400,000 in net proceeds. Now, this is what they're telling you. That $400,000, I need it to do 3 things for me. 1, I need you to find me a replacement home so I have a roof over my head for the rest of my life. Number 2, I need to retain some of that cash. I don't want to put it all back into an illiquid asset such as real estate. I want to keep some of that cash for my savings account. And then the kicker, number 3, I don't want a monthly mortgage payment anymore. And you're thinking, how am I going to make this happen? They're going to probably have to move to a different part of California, Baker, California, or a lower valued area, or even out of state for that matter, right? Well, here's how this plays out with a reverse mortgage for purchase. Let's say you find them a suitable replacement home for $600,000. Based on the age of 73, they qualify for putting down $259 of their $400. So they have $400 net proceeds from the house you just sold. They put down $259 of the $400 they netted from that previous home, right? Naturally, we're going to fund a difference on the replacement home for $341. So $259 and $341 equals the entire purchase price of $600. Now, what have you done exactly? What have they done? What have they accomplished? Well, first, the client retained $141,000 from the previous net proceeds from the house you just sold for them. So now they got some cash in the bank where they didn't have any before, right? So that's cool for retirement. And then, best of all, they didn't generate a monthly mortgage payment. Remember, they made it optional, right? If they don't make a mortgage payment, that's completely fine. That's how reverse mortgages were designed. So now you've achieved their goals. You've put a roof over their head the rest of their life. They put $141,000 in the bank, and they don't have a monthly mortgage payment. You handled all 3 of it. Now they're living in a $600,000 home that's more suitable for the retirement. And now their dollars could go a lot further in retirement with their fixed income. Best of all, maybe this person had a bad FICO score. Do I care if they have a 350 FICO score? No. Do I care if they have an 850 FICO score? I don't. But obviously, they're 2 polar opposites, right? So what we really look at is really the last 24 months of payment history on your credit report, on your property taxes, on all real estate that you have, on your homeowner's insurance, on all homes that you own, and also HOA fees if you have those. We look at the last 24 months payment histories on all of that. And if you have some blemishes, it doesn't mean you're disqualified. We may have to figure out some sort of hardship that happened to you to make you miss those payments. We write a letter of explanation, and in some cases, we may need supporting documentation to accompany that letter to show the underwriter, hey, this was a one-off situation. I missed my property tax bill because my car had to go in the shop, or my kids needed help with money, or something along those lines, right? We can identify that hardship and overcome those issues in underwriting. So FICO scores don't bother us. We just care about the last 24 months payment history. Limited income. The fact that you can get a reverse mortgage and still have limited income is pretty amazing. You can have, $1,400 to $1,800 a month in Social Security and still get a pretty sizable loan with a reverse mortgage. Now, a couple of things you need to know before you write an offer using a reverse mortgage for purchase. And then after this, we'll take some questions. All right, pre-underwriting. It's such a big deal. Let me explain something. So if you've ever worked with a reverse mortgage loan officer in the past, and you approach them and said, hey, I got a customer who wants to buy a house with a reverse mortgage, can you pre-qualify them? And they come back to you an hour later or 2 hours later and say, here's your pre-qualification letter. That's not a pre-qualification letter. What we need to do is we need about a week or 2 to work with that client to get them pre-qualified. I have to pull all the property tax payment histories from the county of all their real estate, insurance, pull their credit, look at the assets, look at everything, income, to make sure they qualify. We even run a statement of information right up front and run fraud guards to make sure we vet out every possible issue, because the last thing that I want to see happen is an older homeowner not to close on a house they're trying to purchase. It's a very sensitive transaction. They're selling their home they've been in for a long time and getting to a replacement home. We need to make sure that we handle with care and get them pre-approved sooner than later. Very important. Next, the client has to go through reverse mortgage counseling. This is a step that's very important. What this step is, it's a layer of protection between the lending industry, such as myself, and the consumer. They want to make sure the consumer understands how a reverse mortgage works. And they're also looking at red flags. For instance, if someone has dementia or Alzheimer's or any kind of issues like that, they want to make sure they catch that. That way we know we need a power of attorney to assist in the transaction. So they got to go through a counseling session. This is a session that they pay for. It's about $125. And it takes about an hour on the phone. Once they go through it, they get a certificate. That certificate's valid for 6 months. And that's when you really want to have that done along with pre-underwriting. Because if you come to me and say, hey, Rob, I sold their house. They're in escrow on their replacement home. Can you pre-underwrite them? Can you get them into counseling? It's going to take me 2 weeks. And if they can't get a counseling appointment right away, that's going to put some time on the escrow period as well. And so we want to make sure we knock out the pre-underwriting and the counseling long before you get them into escrow on a replacement home. And hopefully before you list their current property, right? But either way, make sure we get that done right away. All right, no seller or realtor concessions are allowed on this loan. We can't have a real estate agent credit any of their commission toward closing costs. We can't have the seller credit anything. So that's considered a concession. Also, personal belongings can be considered a concession. You all know the difference between personal possessions and also real property, right? So if there was a couple of years ago, I sold a reverse mortgage to a customer who was buying a house on a golf course, right? And that golf course home came with a golf cart. And of course, the customer wanted it, and the seller wanted to give it to the buyer. And so what we did was, once we got the contract in from the real estate agent, it showed there was value given to the golf cart. And so what they did was they redid the contract and basically said no value was given to the golf cart, and the golf cart was able to come with the property. So very simple, or write in an addendum or an amendment to the contract stating that no value given to the golf cart, and that golf cart can come over, or any personal belonging for that matter. FHA mandatory escape clause. This is a document in your WIN or ZIP forms. Make sure to include this document with your initial offer, and it must be signed by all parties with your RPA, of course. And of course, if you have any questions when it comes time to either pre-qualify, write an offer, talk about a potential scenario, this 888 number is a realtor-only hotline. So please don't hand it out to your customers. We try to make sure we're available to handle these incoming calls 24/7. I know you all work on the weekends, Saturday and Sunday. I understand that. We want to make sure we're available to take your calls. I want you to be able to hit Monday, hitting the ground running. So if you have anything that pops up on a weekend, call this number. We'll help you out as much as we can. If we don't pick it up, leave a voicemail. We will call you back within the hour. Okay, Crystal, do we have any questions out there that I can answer?
Let's go ahead and see. We do have one question from James. Is there a limited income cap for the reverse mortgage for purchase?
A limited income cap, you said?
Yes.
No, they can make as much money as they want. They could make $200,000 a year and still get a reverse mortgage. It's not for the affluent or even for the less fortunate in that regard.
Perfect. That's all the questions that we have. If anyone has any more questions, please feel free to put that in the chat or the Q&A. And if you still would like a copy of the PowerPoint that you see here, please drop your email address in the chat to the panelists and the hosts, and we will get that out to you in this live stream. All right, let's move on to the second half. Oh, actually, we got one more question here. Okay. We got two, actually. First question from Teach, but what is the best practice for marketing and finding these prospects?
Oh, great question. And we have a slide for that, which we'll be talking about at the end. We have some software solutions. We have some complementary items that we're going to share with you and some strategies. So stick around for that for sure towards the end. That's where we show you how to go out and find these older homeowners that want to sell and buy a replacement home.
Perfect. Marty asked, what is the age that they can get this loan?
Okay, so for the FHA reverse mortgage, you have to be at least 62 to get this product, okay? And if you're married to somebody under 62, that's okay. However, we will base the loan amount on the younger spouse. So for instance, if I'm 65 and I'm married to somebody who's 55, we can both get a reverse mortgage, but they're gonna base the loan amount on the 55-year-old. So that way we're accommodating the loan amount to the younger spouse. Now, that's for the FHA product. Now, there's non-government products out there that go down to 55 years old, but the loan to values are way conservative under those ages, and the interest rates are higher. So there's probably, I haven't done really any under 60-year-old reverse mortgages for probably this entire year or even last year. So usually, the private sector, the non-government stuff, usually they're over 60 years old for the most part. But every now and again, I get an inquiry about it if they never pan out. Any other questions?
Yes, let's see here. If they don't want to move out, oh, hold on, let's see. Okay, youngest age, and they can still be employed and used to pay off the land loan, and they don't want to move out of home. Is it possible, Martin, if you can rephrase that question? It does seem a little confusing. Let's see here. What is, Christy has a question. What is the main objection to the reverse mortgage when you talk to seniors about it?
Usually it's, you know, they have well, there used to be a lot of myths that we're going to talk about here coming up, like the government or bank owns the property or this or that. That's really not a thing anymore. I would say the biggest objection is usually that if they don't make a payment, the loan balance grows over their lifetime, which dips into their equity. But remember, simultaneously, the house is also appreciating too. We all know that real estate, given the long haul, will appreciate in value. There's no doubt about that. My house, I bought it for $630,000 in 05. It dropped to 480 in 08, and now it's worth $1 million. So we all know that real estate goes up. So there should be equity in the house. Now, whether they make a payment on the reverse or not is irrelevant. They control that. So that's usually the objection, is that, hey, you know, if I don't make a payment, my balance is going to go up. Where am I going to be at with the equity in the future, right? Or how much can the kids inherit? So that's usually the deal for the most part.
Okay, let's see here. We had some questions about the interest rates. Can you talk a little bit about that?
Yes. So right now, interest rates are in the realm of probably 4.25% to about 5% on the FHA product. And the non-government stuff that's out there, we're seeing rates about 6.99 up to about 8%. And that's how they build their risk in, is by higher interest rates, because FHA is not involved, which I'll talk about a little later.
Okay, let's see what else we have here. I think the question from Martin is, if you would like money from the reverse mortgage to pay off your current loan, will you lose the land, or will you lose the home?
No, remember, with a reverse mortgage, it's just a mortgage on title. That's it. You're still the owner. And if you have a trust, your trust is still the owner. It's just a mortgage like any other loan out there. You don't lose your house. Nobody owns your property but you. I think that's what he's asking.
Okay, we have two questions. Let's see, for the heirs, once the homeowner passes away, how is the value of the equity determined a home? That's actually up in the upcoming slide, so we will answer that. Also, as well, is what if the senior dies, what happens with the property? All that's going to be answered in an upcoming slide. Want to use money to pay off land loan. Maybe the question Martin is asking is if he can use the money from the reverse mortgage to pay off another land loan. Is that possible?
Well, you can use the reverse mortgage proceeds on a regular house that you're living in toward anything you want to do. You can take the proceeds to Las Vegas and put it on the roulette table if you want to. I mean, it's your equity. You can do what you want with it. So if you wanted to pay off a land loan somewhere, that's fine as well. No problem.
Okay, perfect. And if you wanted to rephrase that question, just please feel free to put it back in the chat. We're going to move on to the second half of class now, and we'll take all the questions at the very end.
Okay. So market growth and key facts about our older demographic, more specifically the boomers. Now, I'm not trying to pick on the boomers. What I really want you to realize is that what you're about to see here is not necessarily just the boomers. It's really all generations for that matter. My generation, Gen X, isn't doing a very good job saving for retirement. The generations below me, obviously the difference between myself and somebody who's in retirement is that I'm still working and I still have a chance to overcome my shortfall in retirement. And so, unfortunately, a lot of our boomers don't have that luxury anymore because they're not working. So this is what they're faced with. Okay, this is data that I've pulled over the years. So first of all, we have 10,000 baby boomers that turn 65 every single day. That happened this morning when you woke up. Tomorrow morning when you wake up again, 10,000 more will turn 65. So that's a lot of older homeowners hitting the retirement age of 65 every single day, right? So that's interesting. In addition to that 10,000 boomers turning 65 every day, 10,000 of them are also retiring every day, despite not being ready for it. So that's an interesting statistic that I've learned over the last couple of years as well. So just keep that in the back of your mind. Now, in 2020, we have 100, or we had or have 105 baby boomers out there. Okay, that's a lot of folks. That's nationwide, of course. If you add in their parents, the silent generation, then you're probably north of 120, 125 million or something like that of people that are over the age of 65 or over the age of 56. So that's a lot of folks out there that own houses, by the way. 45% of our boomers have no retirement savings. Only 55 of our boomers have some retirement savings, and 28% of those folks have less than $100,000 saved in retirement. So what does that really mean? Well, that means the bulk of our retired generation is living on Social Security benefits alone. And so if you look at that average Social Security benefit nationwide, it's about $1,500, okay? That's nationwide, coast to coast. So if you throw a mortgage payment in with that equation of $1,400, how much money do you have left over every month? Well, you have $100 left over, or 103 if you want to be exact. That is not enough money to sustain retirement, especially if something comes out of the woodworks that you're not expecting and hits your budget. That'll put you behind the 8 ball, causing you potentially to go into foreclosure on your property. So the average Social Security check out there, $1,500, and that's what most people are living on. So that's why reverse mortgages, that's why people use them, because they can use them to buy a house or even extract equity out of the house they're currently living in. Now, this didn't happen overnight. The 401k was introduced back in the late 80s. And a lot of those pension plans that were in place are now gone. And when you retire, you don't get a pension anymore. You had to self-fund your retirement through a 401k. And that's hard to do when you have bills and you're living in California and trying to do all that good stuff. It's hard to put money away, right? So that didn't happen overnight. Fortunately, we all did our best and our boomers did their best. But one thing they did very well, which I think you know, is that they bought houses and paid down their mortgages, and those houses appreciated in value, which coined this term, right? House rich, cash poor. So a lot of our older homeowners, their wealth is tied up in their real estate, okay? And if you look at that real estate or that equity position nationwide, it's about 8.1 trillion nationwide. That's a lot of wealth tied up in real estate. The question on their mind is, how do they get to that equity safely, right? Can they do it with a reverse mortgage? Absolutely. Could they sell their home and get that cash out and buy something different? Absolutely. It's all on the table, right? They're trying to figure those fundamental decisions out. You are all realtors. You're licensed in the state of California to practice real estate. You're going to be helping them with this asset. I'm a reverse mortgage guy in California. I'm also going to be helping them with this asset, right? Whether they buy or refi and do a reverse, it's all on the table. So we got to try to figure out ways to help them understand their options out there. So a lot of our boomers have their wealth tied up in their real estate, which is not bad. I always tell a homeowner, look, I know you don't have a lot of savings in retirement. You have some, but look at your home. You paid it down. You did a great job taking care of it, paying it down. It appreciated in value. You have this asset. Now let's try to figure out a way to use it safely for you to sustain retirement the rest of your life. And that's really what it comes down to. All right, let's talk about what happens in the future with a reverse mortgage. This really talks about a couple of those questions that we had there that we didn't answer. We deferred them to this slide. So here we go. There's usually 2 likely outcomes with a reverse mortgage when all homeowners on a loan have passed away. Okay, so all homeowners are deceased, and now the heirs are trying to figure out what their options are with the reverse mortgage on that property. There's usually 2 outcomes. Either the house has equity or it doesn't have equity, meaning it's upside down. So above water and underwater. Here's your heirs options if there's equity in the home when all borrowers have passed away. Let's say the home value is $800,000 or $850,000 and their current reverse mortgage balance is $600,000. So as you can see, there's $250,000 in equity. I'm going to use very round numbers here. Here's heirs options number 1. If they want to keep the house, they're more than welcome to. They do have to pay off the reverse mortgage because that was made for their parents, right? And so they have to pay it off. They can either refinance that reverse mortgage to a new loan, they could pay it off with cash or some sort of combination of that. Once they pay it off, they can keep the house and the equity, and the house is theirs. They can do whatever they want. That's option 1. Option number 2, they can simply hire you as the realtor and sell that property, pay off the reverse mortgage, and whatever's left in equity goes to the heirs. So what I'm trying to point out here is this is just a mortgage recorded against the house like a regular mortgage is. And so those are the options if they pass away. Now, if the borrowers haven't passed away and they decide to sell their home, can they do that? Of course they can. There's no prepayment penalties. Sell the house, pay off the reverse, take your equity, go buy another house with another reverse mortgage. You just can't have two reverses at once. So that's either whether they're living or not living, they can sell the property. I will tell you this, majority of the time, because I know I've been in this business for a long time and I've done a lot of reverse mortgages, I get the calls from the heirs when my borrowers passed away. They say, hey, Rob, you did a reverse mortgage for my mom or my dad or my family member of some kind. What do we do? They just passed away. Okay, what do you guys want to do? Well, we want to sell it. That's fine. Go hire a realtor, sell it. Here's your balance. Here's what the house is potentially worth. There's some equity there. Sell it, pay off the reverse. No problem. Okay, so I get that question all the time. More times than not, the house is sold. Now let's talk about underwater. Let's say the house is upside down. The house value in this situation is $700,000. The balance of the reverse is $750,000. We're $50,000 in the hole, right? And the homeowners have passed away. Now the heirs are thinking, oh boy, mom and dad owed a reverse mortgage for $750,000. The house is only worth $7,000. What do we do? How are we going to keep this house? Well, here's first option. If they want to keep it, they're more than welcome to. However, they don't have to pay off the entire reverse mortgage balance. They only have to pay off 95% of the fair market value. In this case, is $700,000. 95% of 700 is $665,000. That's the payoff for the kids to keep the home. Now you're probably thinking, well, there's still $85,000 that's owed on the reverse mortgage. Who covers that? Guess what? That's FHA's problem. FHA pays an insurance claim to the original lien holder for the loss. The heirs get the house at 95% below market value, and everybody is fine and happy. And now they got the house, they can do whatever they want with it. If the heirs decide, you know what, we appreciate the 95% rule. However, we're not going to take advantage of that. What's their next option? Simply do nothing and walk away from the property. The property will simply be foreclosed on, which means a notice of default. Why is there a notice of default? Because the borrowers are deceased. It's owner occupied, right? So notice of default. If nobody responds to an NOD, what's next? An NTS, a notice of trustee sale. Nobody responds to the NTS. What happens after that? Well, it goes to the courthouse for auction, right? If it's not bought at the auction by an investor, then it goes back to the original lien holder as an REO, and now they'll deal with the property and they're going to be made whole. So again, they can do nothing, whether the deceased borrowers had other property, cash assets, Maseratis, you name it, it doesn't matter. It's all untouchable. This is a non-recourse loan, meaning that the heirs and the deceased will not be bothered or their estate. The house will simply be foreclosed on by the lender and nobody will be at fault for that. Very simple. Number three, you can also short sell the property in this situation if it's upside down. You're probably wondering, well, if the borrowers are deceased, what incentives, why would an heir want to short sell the property or participate in a short sale listing if they can just simply walk away? Well, I will tell you this. A lot of these mortgage servicers or reverse mortgage investors are incentivizing the heirs to participate in a short sale listing with you. And that's a good thing. And here's why. It makes sense. If the house is properly marketed on the MLS and syndicated out there and sold to a regular customer, a regular buyer, it's probably going to sell higher than it would at auction, which means that that's a lesser shortfall for FHA to cover on the insurance side. So it makes sense that they would want to have a short sale listing happen over going into foreclosure and winding up at the courthouse for auction. So again, there's realtors out there that are finding these listings and short selling people that have passed away's homes with reverses on them. The heirs are participating because they're getting incentivized. Very cool stuff. So that's what happens in the future with a reverse mortgage. So remember the slide. It's a very important one when you come across an older homeowner that already has a reverse mortgage. This would be the opportunity to say, hey, I know you have a reverse mortgage. I'm your local real estate agent. Did you know about the 95% rule on your reverse mortgage? And you could educate them about that. And they're going to remember you. And maybe the heirs will get wind of that and talk to you as well. So one day in the future, when we all meet our maker and pass away, they're going to call you back and say, hey, or the heirs would, hey, you were kind enough to explain the reverse mortgage to my mom or my dad or my family member. They passed away recently. We don't know what to do. Can you come out here and walk us through that again? And more times than not, these houses are sold to the open market through a realtor. So important to know that there's future business out there with people that already have reverse mortgages. All right, let's talk about some reverse mortgage myths really briefly here. Does the government or bank own the house when you have a reverse mortgage? Of course not. It's just a loan on title like any lien out there, any mortgage out there. Do I or my heirs, will we lose future appreciation if the house goes up in value? No, anything that the house increases in value belongs to you, your home or your estate or your heirs, right? That's not the lenders, it's nobody else's but yours. Can my heirs inherit the home after I pass away? Well, of course they can. It's you own the property. You can let your home go to anybody you wish after you pass away. But we already talked about what they have to do with the reverse mortgage. Now, I will tell you this. 60 to 70% of the older homeowners that I have worked with in the past do not have trust set up. I take that opportunity every time when someone doesn't have one to spend some time about that and talk about the importance of having a trust, right? We all know when you pass away and you're on title, holding a title as a single person or a married couple, that your house is going to wind up in probate. And we know that a trust will help mitigate that, right? Not just a will. A will, remember, a will tells where your stuff's going to go. A trust puts somebody in the driver's seat to make the will happen. So that's why it's important, because if you don't have a trust set up, the courts will gladly step in and help you figure, or help the deceased figure out where their home's going to go. So the heirs have to come in and petition the courts for ownership, which is a cost against the estate based on percentage of the estate, not factoring in debt. So it can be costly and timely. And so it's always good to have houses, places in a trust. I've been in the business long enough. I have a trust set up. I have POAs. I have everything dialed in because I know the importance of it. I've seen the horror stories in my book of business. All right, if my house ends up being underwater, in other words, I'm still living, I got a reverse mortgage, my balance is higher than I thought it would be because I never made a payment or anything, and now the market has crashed. Will I get a letter saying I have to leave the property? Absolutely not. It's not your problem. You get to live in that house for the rest of your life as long as you're abiding by the rules of the reverse mortgage. Now, let's talk about those rules. We do have rules to keep the loan in good standing. First one we already brushed upon, which is the occupancy, right? Got to live in the house that has the reverse mortgage on it. Now, sometimes when you're older, you may get dementia or Alzheimer's and require to get care outside the property. If you have vacated the property permanently for a skilled nursing facility and no other borrowers live there, then the house needs to be either refied out of the reverse or sold to pay off the reverse. But I will tell you this, sometimes the person with the memory issue or Alzheimer's or dementia, the loved ones bring them back home for care. If they do that within 12 months of leaving the property, the clock restarts and the loan will remain in good standing. So I've had that happen where a client of mine left a house to a memory care facility. It didn't work out. They brought him back 6 months later and got him care at home, and that's fine. They didn't violate the 12-month rule. So as long as they understand that, that's something you can always explain to an older homeowner if you come across somebody in that situation. Number two, when you have a reverse mortgage, you still have to pay your property taxes, your homeowner's insurance, and HOA dues if applicable. So if you don't pay these on time and you start to default, the lender of the reverse mortgage has the right to foreclose on you. So got to keep those paid on time. Last but not least, you got to maintain your home to minimum FHA standards. Well, what does that mean exactly? Here's what I tell my customers. When you get a reverse mortgage, you get an FHA appraisal done on the house, right? That appraiser is there to do two things. One, to make sure the value of the asset is what it is, and to make sure that the house meets the FHA minimum standards. If it does, keep your house in that condition going forward. You'll never have a problem. The number one culprit for foreclosures in our industry is occupancy when the borrowers have passed away. The heirs or anybody else that's involved in that does not communicate to the servicer their intentions with the property, and eventually after a year's time, they will start foreclosure. So it's important to communicate intentions when the borrowers in the loan have passed away, what you want to do with the house. You want to sell it, keep it, etc. All right, so that's the rules, very straightforward. Now let's talk about calculating loan amounts. Remember I told you earlier that age is a big deal, right? So age is a big deal. The purchase price or value is a big deal. Interest rates are a big deal. All these things matter for our loan amounts. And here's how this works. So we made this app for you guys to have on your phone. So that way, when you're at a customer's house or you're in the field working and you're running a net sheet on someone's house on a potential listing, and you're seeing, okay, well, they're going to net $300,000, $400,000, $500,000 after you sell that property. What can they buy? you can actually plug in a purchase price and their ages and hit calculate, and they'll tell you the down payment. That down payment happens to either equal the cash they may have on hand for a down payment, 100% gift funds from a family member, or net proceeds from a house they're selling. Guess what? You've already figured out a big piece of that puzzle, that they can buy that replacement home. So the app is very simple to use. Put the buyer's ages into the app and the purchase price and hit calculate. What will happen is it'll show you the down payment required to make that purchase happen and the loan amount, of course. Now, for married couples, only one spouse needs to be 62 or older. So if you're married to somebody under 62, make sure to put both ages in there, but the loan amount and down payment will be based on the younger spouse, always, okay? But only one has to be 62 to be qualified for the FHA reverse mortgage. That was a rule that happened many years ago, and that underage spouse that's not 62 will be protected to live in the house for the rest of their life. And that's a good thing. For unmarried borrowers, everybody has to be over 62 to be protected in the house for the rest of their lives. So if you have a group of 4 people and they're all of different ages, and the youngest one is 62 or 65 or whatever that is, we're going to base the down payment and loan amount on that younger person, even though the other person in that group of 4 may be 85 years old. We're going to look at the youngest person in that group of people. Okay, 970-800. This means a couple different things in the lending arena or lending industry. Okay, so in the lending industry, in the FHA world, this is the maximum loan amount for the regular FHA mortgage, the first-time home buyer, where you're putting 3.5% down, or for the person that doesn't have the best credit or income. 970-800 is the max loan amount. In our world, on the reverse mortgage, it's the maximum value or purchase price that we use to calculate the loan amount. And here's what I mean by that. Let's say you have a homeowner buying a house for $1 million and they're 70 years old, as an example. And let's say you have another homeowner, not related to the first one, buying another home over there for 970-800. Well, guess what? They're both going to get the exact same loan amount, but the person buying a house for $1 million is going to put a dollar for dollar down payment above and beyond that 970-800. So that is the maximum purchase price and our loan amount that we use to base our loan amount. Anything above and beyond that, they're putting extra dollars down. Now, with that being said, anything about 1.1 million or greater when they're buying a house with a reverse mortgage, we then should start to look at the private sector, the non-FHA stuff. These loan amounts can go up to 4 million, depending on the value of the property. We funded a loan a few months ago on a $10 million property, and they got a $4 million loan amount. So they're out there. People are buying these properties. So again, reverse mortgage that's a different product. The app does not calculate that. Only does the FHA product. So you have to call us for details on the private sector. Now, the way you download this app is you simply go into your app store and search REV, R-E-V, the number 4, P-U-R, which you can see at the top of your screen there. Download the app. It's free. It's a way to calculate these loan amounts and also get a hold of us if you need to. Very simple. Okay, how are we looking on time? We're doing good. All right, so a couple things from marketing, right? And then Crystal's going to take it from here and cover some other stuff. All right, we have 2 softwares here that you can leverage. We have the first one, GoCordum.com. GoCordum.com is a proprietary software that we developed. And what this software allows you to do, it allows you to take 2 to 5 of your highest prospects that are older homeowners that you think may want to list their home and buy a replacement home soon, okay? What you do is you put them in the system along with your information as well. And we will mail them for 6 months newsletters on your behalf that talks about things that are important to an older homeowner when they're selling their home. For instance, one of the newsletters talks about Prop 19, right? Property tax portability. That's an important topic for a lot of our older homeowners. It also talks about capital gains. A lot of our older homeowners will have a capital gain, and they need to think about that when they're buying their next property. We talk about beware of all cash buyers. There's a lot of investors on the loose right now offering 60 to 70 cents on the dollar to these older homeowners, claiming that you don't need a real estate agent to buy and sell your property. We all know, despite paying a real estate commission, you all will get a bigger price for the home. So that's worth it in my book, right? We all know that. Very simple. So a lot of our older homeowners will fall for that old, here's 70 cents on the dollar, let me buy your house with no realtor. So we talk about that in the all cash buyers. So we have all these newsletters set up to go out automatically. And best of all, when they go out, you get an alert that it's gone out. And then that gives you an opportunity to call them a week later and say, hey, Bob and Sally, I sent you a newsletter about Prop 19. Did you want to schedule some time to talk about how you take your property tax base to your next property if you ever decide to sell that home, right? So it's a way to engage them with you about the topics that are important. Now, number 2, Title Pro 24/7. You guys probably might have this software already or used it in the past or got it from your title person. We offer it as well. It's a free thing to have. You just have to pay for the data that you do want to pull down. I think it's like 6 cents a record. So it's very inexpensive. 100 records, $6. Very basic, right? So what you can do with the software is you can say, hey, I want to pull down data for people that live around my house or around my office or in this certain zip code or in this geographical area that are 65 to 99 years old. I want them to have a little bit of income, not a lot. I want them to have a good loan to value. I want them to live in a 2-story property. I want the house to be 2,500 square feet or bigger with a big lot with a pool. You can do all this stuff, right? And create this perfect list of somebody who may want to downsize that's having cash flow issues in retirement. Pull down that data. Then I would suggest go drive the neighborhoods that you just pulled down and look at the houses and keep notes on them. If you see a house that's dilapidated or looks like there could be some issues there, like they don't have a lot of income coming in, they can't really keep the home up, hey, that's a perfect opportunity for you to approach them and say, hey, look, this house is dilapidated. It's not for you anymore. I can get you to a turnkey property without generating a monthly mortgage payment, get you to a better home and make your retirement and health better for that matter. So again, this is a software that'll help you do that. We have tutorials that handle all this stuff, videos that tell you how to use these softwares. So Crystal, share with them how they're going to get access to all the softwares and all the tutorials and videos we have to help them build these campaigns out to try to attract older homeowners to list with them. Crystal, are you there?
Yes, I am here. Are we ready to go over the class materials?
Yes.
Okay, cool. If you want to go to next slide. There we go. Okay, so everyone, well, how you're going to get the logins for all of the materials is we're going to send you 2 logins in your emails. First login is going to go on your website. You're going to go on our website, thereverseeducators.com. Once you set up your logins, you get access to our course refresher and just a few videos that you can watch at your own time, at your own pace. Each one is about 10 to 12 minutes long. And you can you learn actually a little bit more about the reverse mortgage for purchase. For example, there's something called overfunding a reverse mortgage for purchase and having a guaranteed line of credit. That's something that we didn't really have time to talk about. So you can learn all about that in the second video right there. So you're going to get access to that along with the recording of the class. Rob, if you want to go to the next slide, we also have the complimentary marketing resources available. So I know Rob mentioned that you can get newsletters and go court them, but if you want to just kind of print them out on your own and send them and however they fit in your marketing strategy to your clientele, then you can just download these newsletters and go from there. On the back, you can put in your information. And once you put in your information, you can just like print it out. It'll be on the back and they'll be all ready to go. You can also send them to a professional printer as well, or you can print them at home. Again, whichever kind of fits your current marketing strategy the best. Last but not least, we have our tutorial on Title Pro 24/7, which is the other login that we're going to get you, which you can access on our website. Last slide, please. Once if you have any questions at all, if it's on the reverse mortgage for purchase, or if you just have a question on our website, you have difficulty logging in, just call us at 888-242-5959. There's Robert and Robert's partner Ryan's email if you want to email them directly on any specific situation, or of course give us a call too if you have a potential client or if you just want to run specific numbers. We'll definitely get that over to you. And that is pretty much it. Let's go over the couple questions that we have here because I know we got a few, and then we'll end the class. Let's see here. I want to use. Okay, so we got a couple questions from Martin here. I'm going to try to go down all of them. Can we buy down the loan, the interest rate on the loan?
Yes, you could buy down the margin on the loan, correct.
Okay. Can you get an FHA? Can you get FHA rates? So if you want us to run specific numbers on your home, if that's something you wish to do, get in touch with us at that phone number, or go ahead and shoot Rob over an email, and we'll give you specific numbers pertaining to your situation.
But to answer that question a little more deeply, the FHA regular forward mortgage and our reverse mortgage are two different products. Those rates don't line up together. So again, our rates are from like 4.25, 4.5 up to about 5.25.
Okay. Another question is the reverse mortgage like adding on a second loan? Do I keep my Bank of America loan, which is 550,000, and will Bank of America let me keep my first loan the way it is?
No, reverse mortgages can be the only loan on title. So we would pay off your Bank of America mortgage with a reverse mortgage, and that would be eliminated.
Okay. How do you get an FHA instead of a non-government reverse mortgage?
It just
Loan.
depends on the scenario. So higher valued homes, 1.1 million or greater, is when we start looking at the private sector. Usually the FHA product does the job for values of 1 million or less, just depending on the scenario and what you're trying to accomplish. So we look at all products whenever I run a scenario, private and FHA products.
Okay, and does Bank of America, or maybe generally the question is, does my current loan have to approve the reverse mortgage?
No, because we're paying off we're paying off the loan that's on title. It's like refinancing.
Okay, perfect. Lynette asked if the heir wants to keep the home and it's in the trust where the home is to be inherited by the heir, can the heir maintain the original tax base?
That's a question for the county. I would definitely bring that up with your tax advocate or tax assessor.
Right. So when it comes to tax questions, Rob, to kind of clarify with everyone, a lot of these questions have to just do with whatever the tax rules are or the tax situation in the county, because we're just a loan and it would be the same kind of no matter what kind of loan you'd be getting. Yeah. Is that correct?
Yeah, the reverse mortgage has no bearing on tax base.
Okay, cool. Lennon asked, does one have to take out the maximum loan amount if the home is worth over 1 million?
No, you can, there's different loan amounts based on different interest rates. There's ways to, select different loan amounts. So it just depends on the scenario, how we want to do it or what you're trying to accomplish. So of course, that would involve some sort of a discovery or educational process about the scenario for myself to get a clear picture on what I think would be the best scenario for that particular customer.
We have a question. Can you get a reverse mortgage loan from a not paid in full conventional mortgage loan?
I'm not sure what that means exactly.
If you can clarify the meaning of that question, that would be great. I'm going to leave that one open and let me see if we have any other questions. No, that's it. You want to go ahead and wrap up the class. If you, anonymous attendee, if you want to just clarify your question, we can answer that right at the very end.
Sure. So one of my closing statements that I always say is this: whenever you come across an older homeowner and they either ask you about a reverse mortgage or they appear to be having some sort of financial hardship, or you discover through a conversation that they may be, or something along those lines. So I just want your ears to perk up a little bit and think about the strategies that are out there. Maybe more times than not, like I said earlier, the house that they're living in is usually the culprit, and getting that house listed and sold and finding that replacement home, either using a reverse mortgage or purchase or not, is usually the strategy that seems to work out for them. So, just keep your eyes open out there. We're doing these transactions. I have 2 or 3 reverse purchases going right now, in addition to my regular refi reverse mortgages. And then my business partner Ryan's got a few going as well. So they're out there. We're doing these loans. We're helping older homeowners use this product to buy the next home as purchase money. So it's a very interesting time. We're seeing a lot of older homeowners that are selling their houses because their values are up, and they're trying to find that replacement home.
Okay, let me see here. We got, okay, how much does it cost? Well, how much does it cost to buy down the loan to 3.5% from 4.25% on a $700,000 loan amount?
Oh, that doesn't, that is a very regular mortgage question. That's not how it works in our industry. So if you have a specific scenario that you wanted me to run or look at, please feel free to get a hold of me after class. My email's right there. Because it's not just a straight up buy it down from 4.25 to 3.5. We don't even have 3.5 rates right now. So, and then a $700,000 loan amount, that home value is going to have to be well into the 1.5 to 1.6 million to make this thing work. So
Okay.
just taking a stab at it.
Perfect. So the rephrasing of the previous question is, if the house's conventional loan has not been paid off yet, can the owner still get a reverse mortgage loan?
Yeah, you don't have to be free and clear to get a reverse. We can pay off whatever you owe on your current mortgage with a reverse mortgage. So just think about it as like a regular refi, right? When you go to refinance your home with a regular mortgage, it pays off your old mortgage, and now the new loan is your new loan, right? That's what's on title. The old one's paid off title. Same thing with a reverse mortgage. If you owe $300,000 on a loan or $400,000 on a mortgage, and you qualify for $400,000 on a reverse, we're going to pay off what you owe, and now that loan is off title and removed, reconveyed, as they put it. And then the new loan, the reverse, is on title as a lien, just like a regular mortgage.
Perfect. All right, that looks like all the questions we have. Thank you everyone for joining us today. Thank you so much, Elsie and Cassie, for letting us host this class for Orange County Realtors members. It's always an honor, and we appreciate the opportunity so much. And thank you for hosting the Zoom today. If anyone has any more questions, please feel free to call us. We will be available, and we are of course available on the weekends. And please feel free to email us as well. Thank you so much, and everyone have a great day. We'll be in touch.